Good evening. I hope all of you are doing. In today's video, we will use iChart as a tool. Try to identify market's direction using the open interest. Most of you have a confusion like what data to view and catch the changing trend during intraday market. So I'll show you a simple method on iCharts. Uh, See, what you need to do is you need to select this option. If you have a premium subscription of iCharts, what you can do is you can go to cumulative open interest change. Okay, so this is one way where you can see in a pictorial form, graph will appear where there will be a crossover of open interest of put and call. So I'm taking an example of Nifty today to explain and to see where it has actually changed. You can see these calls were rising from the opening of the market, and from there the crossover happened around 1060 here. So let's look at the chart as well. So chart says that 1016 is what we have got an entry on the super trend also, which is what this data is saying on cumulative OI change. Now there is a better way if I have to tell you and how you can see that. So use this option called total put minus call difference OI. So this particular thing will give you a 5-minute change in open interest. Okay, strike price. So I usually select near ATM strikes 9, and you can always select this option of auto adjust ATM strike. Let me open my Epic pen here. So let's look at this data from the starts from 920 onwards. At 920, this is the total P change in open interest, total call change in open interest for the day. So market opened at 920. The put open interest was 21 lakhs and the call open interest was 11 lakhs. So it was showing a green sign saying that puts are higher, calls are lesser. So the direction is upwards. Okay. At 925, 55 lakhs, open interest got added. Then here 32 lakhs. Then at 930, 68 lakhs, 64 lakhs. Around 935, 81 lakhs, 72 lakhs, 93 lakhs, 89 lakhs, 1 crore and 1 crore, 3 lakhs. So what happened at 945? 945, there is a complete shift in trend where we can see that the speed at which the put was increasing was lesser than what was increasing on the call side. So call side was jumping faster in terms of OI change. So what happened next? Let's look at this on chart. At around 945, what was happening in the chart? So this is at 940, 945. So 945, price came below the key moving average and it was holding there. So this was the first indication which it gave. And if you see, the MACD crossover happened at about 935. So 935 was the time there is a MACD crossover and there is a crossover at moving average, but it was holding the level. So then what happened next? Then at 950, suddenly there is a huge jump. There is a 11 lakh jump and this stayed same. You can see put was like hardly increasing by 30,000. Call increased by about 11 lakhs. Then it jumped to 1.18 to 1.25. So at this time you can see there is a change in the trend from this point and it started moving up. So you can see 940, 950 levels. This time you were able to identify that there is something happening at this time. So this was the point where around 950 this bar gave you a symbol that it is consolidating. What was price action saying? Price action was building a sideways zone, and once this zone was broken around, say, what was this time? This was around exactly at 10 o'clock. So 10 o'clock you can see, actually the indication came much before, it was around 950. And see, all the rules will remain the same, whether using open interest to identify the trend, whether you're using price action to identify trend, or any indicator. The rules should remain the same because nothing works 100%. And there will be many days where you will see that open interest will be saying something, but price action will be saying a different thing. But always follow price action, okay? Because not everything will get captured in the open interest data from all the sources. There will be a lot of things which will get settled by the evening, by the closing of the day. So don't follow the data blindly, but price action is the ultimate thing which you need to follow. Okay, so we were at this point. So from around 9:55 onwards, this entire day was like building on call open interest. So end of the day, it went up to 2 crores, and the put open interest was winding up. You can see there's a lot of winding up happened from 135 onwards. This time 135. Now entire put writing stopped and they started closing their position because it was going in the reverse direction. So at around 135, let's see the chart what happened at 135. But the move came at around 1.5. Move started around 1.5 and then 135 the move ended actually. From there it started consolidating and then it started moving up. So according to this data, we should have got an indication at 1.5. So let's see what was happening at 1.5. 1.5, 2 crore, 2 crore 59, 2 crore 56, 2 crore 56.99, 262. So it was continuously increasing, and there was no, it was the indication given at the beginning of the day, and it continued to stay under the super trend. So this was a place where super trend reaction happened. So price action was giving an entry here also. When this candle was completely taken over, rejected at the key moving average level plus a super trend, and this was breaking the key moving average. So this was a fall which you can capture, but you can capture this entire trend if you are following. But now after this point, 130 onwards, you see 130 onwards, it was confusing. The data was confusing here because here you are seeing 2.95 crores of call over a change, which is going up continuously. There is a winding, put unwinding happening here. Puts are being closed and positions were going into negative. And from till that time, 225, it reached a peak about 3.28 crores on call writing. Okay, after that, it started dropping from 3.24 from 225. What happened on the chart? 225 onwards, this was the candle, and from there immediately it started going up. So from here, calls started dropping, and there is no increase in puts as such visible in this data. But the price action is saying that we can open a little higher or we can open gap down also. We can't say because we have to look at the price action on a daily chart. So daily chart, still the low is 18,710. Here the low was 18,790. So low is not broken. So there is still a possibility that we might open bullish. So this is how you can use only this tool and this data. You can put it 15 minutes also if you want to see in a compact form and see only the first 15 minutes. 9:30 it was put was higher, but later from 9:45 onwards it's a pure trend on downside. It was very clear, but most of the time on the sideways days you will find it very difficult to trade with this data because this will not give you clear picture because a lot of times what happens is the data will not get updated real time because it's not submitted also. So I have seen the days when this data works. I have seen the days when this data doesn't work. You have to completely rely on price action and what you can see on the chart and understand your psychology. If some key level is broken in the first 15 minutes, the first 15 minutes candle was very crucial. From there the selling started. If you're trading the price action, you can easily short it from here. Stop loss would have been here, and you can go till this end, and your trailing stop loss should be here in the last because it formed 1, 2, 3, 4 candles at the same level, and it is also near the 200 period moving average. So the moment the trailing stop loss is hit, you are out of this trade. Now after this breakout, now it is taking a retracement here. So what will happen if it takes out this high? Then it is forming a W pattern. Okay, understand this. This is a W pattern. Then it can move higher also. So anyways, overall market is bullish. Still the low is not broken. So we can continue the momentum to go up. So this is how you can use this data, but this is an additional data which you can use to confirm your view on the market if you are understanding price action well. So price action is the key. Whatever you add will be a confirmation from it. For example, if you are adding a super trend, it's a double confirmation for you. If you are adding volume, it's a triple confirmation for you. If you are adding an MSCI, it's a fourth confirmation point for you. So you are trying to improve your accuracy by improving the odds of this trade. So treat it like that and you will be able to succeed, and your ultimate risk management is going to make you profitable, nothing else. Risk management. That means if you are shorting here, your stop loss should be here. You should be ready to take this stop loss. Don't wait if it starts going up, okay, it will come back, it will come back. Don't wait here. Just cut the trade and find some other trade. If not today, tomorrow can be your day. Thank you so much guys for watching this short video. I hope you have learned something. And if you have any doubts on what tools you use, please refer my other videos on this channel. And please do subscribe and share.